morning. I'm Maiki Oreta and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. A financial group warns the flood control scandal could weigh on economic growth as it threatens to slow government spending. The Anti-Money Laundering Council is probing the possible role of banks in the plunder of flood control funds worth billions of pesos. National inflation edges up to 1.7% in September. That's according to the Philippine Statistics Authority. And in the United States, Republicans and Democrats remain at a standstill as the government shutdown enters its sixth day. First, let's take a look at how global markets performed overnight. U.S. stocks ended mixed as optimism over new AI deals offset concerns about the ongoing government shutdown now on day 6. Tech chips led the gains after AMD announced it will supply AI chips to OpenAI, a deal worth tens of billions of dollars that could give OpenAI up to a 10% stake. AMD shares climbed, lifting the Philadelphia Semiconductor Index. Meanwhile, the federal government remains closed, delaying key economic data and leaving investors relying on secondary indicators to gauge the Fed's next move.
Well, the government remains shut down and the market remains unconcerned with the government being shut down. And perhaps historically, there's a precedent for sharing that view, as historically markets have performed relatively well when the government has shut down. And in this case, I do think there is reason to have that optimism. Historically, the average length of a government shutdown has been 8 days.
The Dow Jones Industrial Average lower by 0.1%, the S&P 500 lower by 0.4%, and the S&P 500 rather higher by 0.4%, and the Nasdaq higher by 0.7%. Over in Europe, markets ended mixed. The UK's FTSE up by 0.1%, Germany's DAX flat, and France's CAC 40 higher by 1.4%. The flood control scandal isn't just a political storm. Global investment bank Nomura warns it could slow government spending and drag on economic growth. In its latest brief, Nomura says that the controversy over flood control projects may prompt the Bangko Sentral ng Pilipinas to reassess its economic outlook. The report notes that possible delays in government capital spending could hurt GDP, especially while the output gap remains negative. Nomura adds that weaker public spending could push the BSP to cut policy rates to support economic activity. A rate reduction, it says, could help revive domestic demand amid mounting downside risks since August of 2025. The firm assigns a 60% chance of a rate cut and a 40% probability that the Monetary Board keeps policy rates unchanged. Loss of investments and jobs could be the bigger casualty if the country's exports continue to underperform. A warning from the head of the Philippine Exporters Confederation. PhilExport President Sergio Ortiz Luis Jr. says weak exports could lead to reduced investments, slower expansion, and job losses. He also urges government to allocate a more realistic budget for the Department of Trade and Industry to strengthen export performance. Ortiz Luis recommends doubling the DTI's budget, noting that better funding would help boost exports and support small and medium enterprises still struggling to catch up with regional peers. He adds that redirecting even a small portion of funds from flood control projects could provide a major lift to export development and SME growth. A new crackdown on corruption. The government is moving to bar tainted contractors from future projects. Economic Planning Secretary Arsenio Balisacan says the proposal aims to boost accountability amid fresh controversies in the flood control contracts. Officials also point to the new procurement law, now requiring full disclosure of bidding documents and beneficial ownership to prevent bid rigging and front companies from slipping through. The Investment Coordination Committee, meanwhile, has raised its review threshold to 5 billion pesos and will closely screen all foreign loan-assisted projects. Balisacan says that the reforms will speed up approvals while avoiding costly mistakes through stronger monitoring. Banks are under the microscope. The Anti-Money Laundering Council is investigating who helped move the money in the flood control scandal. The AMLC says it is looking into the possible role of banks and their employees in facilitating funds linked to the multi-billion peso scheme. Officials warn that they can file money laundering charges if banks or staff are found to have enabled suspicious transactions. The council is also tracking the foreign assets of respondents, including offshore accounts and overseas properties, with help from international partners. So far, the AMLC, through the Court of Appeals, has frozen over 4.2 billion pesos in assets from bank accounts and luxury vehicles to real estate tied to the scandal. These actions show that the government is finally following the money trail, zeroing in on the networks that enable corruption. And for the business community, this is a crucial test of institutional integrity, whether authorities can enforce accountability without shaking trust in the banking system that powers our economy. And that crackdown is widening. The Anti-Money Laundering Council freezes 726 financial accounts and 53 vehicles belonging to IM Construction and its owner, Robert Imperio, the fourth contractor charged by the DPWH with graft over alleged ghost flood control projects in Bulacan. Documents obtained by Bilyonaryo show IM Construction and Imperio received about 7 billion pesos from the DPWH. The AMLC says that the financial transaction patterns of IMC and Imperio point to a scheme to conceal the true origin of funds linked to anomalous projects, including advance payments made without any actual work done. The 726 frozen accounts are spread across 53 banks, brokerages, wealth managers, insurers, and auto finance firms. The council concludes that the money and assets, including insurance policies, vehicles, and real estate owned by IMC and Imperio, are proceeds of unlawful activities and are therefore subject to seizure. The president is tightening the reins on public funds, pushing agencies to do more and to do it faster. Speaking before the Philippine Development Forum on Monday, President Ferdinand Marcos Jr. said his administration will not tolerate delays or waste in the execution of government programs. He added that reforms are underway to speed up the disbursement of official development assistance, or ODA, and to ensure foreign-funded projects are actually completed.
We will not tolerate measurement without action, nor will we tolerate the wastage of public funds. Walang perang sasayangin, hindi tayo papayag na lustayin ang kaban ng bayan.
The nation's moral compass is speaking out. The Catholic Bishops' Conference of the Philippines is urging authorities to pursue justice in the flood control scandal without fear or favor. The CBCP calls on all public officials to uphold the integrity of probes being conducted by both the Senate and the Independent Commission for Infrastructure. It warns against any attempt to preempt or derail the investigation through backroom deals, leadership takeovers, or selective justice. The group stresses that the ICI must do its work thoroughly, transparently, and without fear or favor. The bishops also warn against a whitewash and call for full accountability. The CBCP asserts that only through truth can the nation rebuild trust and ensure that flood control doesn't turn into another flood of corruption. The church's statement adds moral weight to the call for clean governance, reflecting the growing public demand for institutional accountability. Now, from cleaning up projects to stabilizing supply, the government now turns its focus to food security. The Philippines opens a one-month rice import window in January before reinstating the ban from February to April. Agriculture Secretary Francisco Tu Laurel says that the department is looking to import 300,000 metric tons of rice early next year. a move already approved by President Ferdinand Marcos Jr. Laurel told House lawmakers that imported rice stocks are expected to run out by the end of November, with local harvests to cover demand through December. The government earlier suspended rice importation to support Filipino farmers during the harvest season. The temporary import window aims to prevent a supply crunch and tame price pressures after the harvest, a delicate balancing act between protecting farmers and keeping inflation in check. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back. Let's check on Asian markets this Tuesday morning. Right now, the Nikkei 225 is in the green, up by 0.6%. Hong Kong's Hang Seng Index going the other way, lower by 0.7%. Shanghai's Composite up by 0.5%, and Singapore's Straits Times Index up by 0.7%. Here at home, the main gauge snapped out of its three-day winning streak yesterday as investors took profits ahead of the September inflation report, which was just released this morning. The index slipped 1.8% yesterday to close just above 6,000 points, with value turnover at about 12 billion from over 2 billion shares traded. Now, the pullback reflected profit-taking after last week's rebound and growing caution over the latest inflation data, a key input for the Bangko Sentral's next policy move. With the market back around the 6,000 level, traders say momentum will now depend on how today's inflation results reinforce or reverse expectations of rate cuts for the year. Now, taking a look at the PSE index right now. As of 10:14, the main gauge is trading to the upside, higher by about 0.5% to 60.28. The broader all shares index in the green as well, up by 0.4% to 36.57. Taking a look at the sub-indices, looks like it's a picture of strength. Everything's in the green. And total volume is at 761 million shares, valued at a hefty 6.45 billion pesos. Interesting over there. Now, advancers, market breadth is positive. We've got 80 advancers, 36 decliners, and 55 stocks unchanged. Taking a look at the currencies, the peso opened at 58.35 against the dollar, unchanged from its previous close. Speaking of the peso, the local currency sinks to an 8-month low, mirroring the slide of Asian currencies against the US dollar. Data from the Bankers Association of the Philippines shows the peso closes at 58.35 per dollar, down from Friday's 57.88, its weakest level since February 3. RCBC chief economist Michael Rickleford says that the dollar strengthens as the yen plunges following the appointment of Japan's new prime minister, easing bets of a Bank of Japan rate hike. The yen posts its biggest drop in 5 months as Sanae Takaichi is set to become Japan's first female prime minister. Her expansionary fiscal stance prompts traders to scale back expectations of tighter monetary policy. The peso slide underscores the region's vulnerability to a stronger dollar and shifting global rate expectations, with local traders now watching how today's inflation print and the Bangko Sentral's next move could shape currency sentiment. Just as the Bangko Sentral ng Pilipinas prepares to meet this week, the September inflation data is now out, showing a slight pickup in price pressures. Data from the Philippine Statistics Authority shows headline inflation rose to 1.7% in September, up from 1.5% in August. The increase was driven mainly by higher transport costs, which rebounded after a decline the previous month. Food and non-alcoholic beverages also registered faster price gains, adding to overall inflation. Now, inflation still remains well below the BSP's 2 to 4% target range, but the timing of this uptick just days before the Monetary Board meeting could factor into whether policymakers proceed with another rate cut. Now, the Bangko Sentral ng Pilipinas, as we mentioned, says the inflation print is within its own forecast range of 1.5% to 2.3%. It adds that inflation is projected to average below the low end of the target range in 2025, primarily due to the easing of rice prices in its previous months. Now, for the upcoming policy meeting, the BSP says that the Monetary Board will review newly available information and reassess the impact of prior monetary actions in light of evolving economic conditions and their implications for inflation and growth. Still talking about inflation, September inflation did edge higher, still low, but starting to heat up. The latest data from the Philippine Statistics Authority shows a slight pickup in price pressures. All this comes just days before the Bangko Sentral ng Pilipinas is set to decide on monetary policy. With us now to discuss this inflation print and what it means for the markets and for monetary policy is Jonas Revelas, Senior Advisor at Reyes Takandong. Hi, Jonas. Good morning.
Good morning, Maiki.
Okay, so inflation, the actual print came out 1.7%. Surprise to the downside, given that you expected 1.9%. What's your initial reaction to this, Jonas?
Well, basically, I think this actually raises the probability of a 25 basis point cut this October. So most likely, this gives more room for the BSP to just help support growth, and at the same time, inflation appears to be in check because given the expectation of 1.9, people were expecting faster food prices given the set of calamities. It was more of the transport sector that led the inflation. So this is something that appears to be manageable despite probably between now and year end, as the Christmas season is here. Definitely there'll be some inflation pickup, but I think we'll end the year still below the 2% lower end of the central bank.
Yeah, so still below the 2 to 4% target range of the BSP. What exact figure do you think we'll end the year at for inflation, Jonas?
Most likely, on the average, most likely will probably end maybe 1.9%. Probably the year end or December inflation could probably be at maybe 1.8.
Okay, this opens the door for rate cuts by the BSP. The BSP is going to be meeting at the tail end of this week, about Thursday, to discuss monetary policy. What do you think they're going to do on Thursday, given the 1.7% September inflation print?
As I said, I'm looking at least 25 basis point cut. Again, this is against the what everybody expected to be a pause, but the 1.7 is a welcome number. So that could actually raise the probability of the 25 basis point cut.
And what next come December when they meet again? What do you think that, based on this current trajectory?
So basically, if we do a cut this this Thursday, then definitely that will be all for the year. We'll probably see how inflation will materialize for the fourth quarter. But most likely, if we end at 475, we could be probably looking at another 25 to 50 basis points in 2026.
Interesting. Yeah, the bigger picture is that inflation is well within the BSP's 2 to 4% target range. What does that tell you, Jonas, about price pressures as we head into 2026?
Well, basically, this could be, inflation could be on the rise again, especially sometime November. The high, the high base for rise would have ended, and this could actually mean again another potential rise for inflation. So for next year, I'm actually looking at slightly higher, between 2 to 3%.
Would you say this is safely within the BSP's Goldilocks zone, not too hot, not too cold?
Definitely. I think it's still it's there. It's actually a good level for business. And given the present situation is that this would be the lucrative time for business, especially those listed companies, to start their debt building, meaning they issue debt. No?
Okay. More broadly speaking, how do you see this data feeding into market sentiment, especially with the peso that's been under pressure as of late?
Well, basically, one thing to consider that it despite the potential cuts that we're seeing, the Fed is also seen to cut by roughly 50 basis points this year. So that should at least really give us some elbow room. And given that they're in a shutdown, that actually lessens the pressure for the peso to weaken, so to speak, because of the jittery feeling in the U.S. However, what we saw in the Japanese yen shows the vulnerability of the Philippines relative to other issues which are mostly political. Whether it's Thailand, Indonesia, the Philippines, or Japan, then any adjustments on the dollar will also be reflected to us. So you have to also remember that there's still that sword of Damocles, which is the tariff. So once those tariffs are finalized and we get to hear the Supreme Court confirm Trump's tariff, then definitely we're in for another currency adjustment.
We're at an 8-month low, mirroring the slide of other Asian currencies against the dollar. Where do you think the peso is going to finish this year, Jonas?
Oh, well, basically, given the trajectory of where we are, given all of this floodgate scandal, I think the risks at this point in time, I'm looking at a year end of around 58.90, which was my baseline since last year.
Okay, speaking of risks and that floodgate scandal that you mentioned, Jonas, Global Investment Bank Nomura says that all of this is going to weigh on economic growth. Where do you peg that at the end of the year as we finish 2025?
Well, basically, I guess what we can say is that the Philippine economy is on a holding pattern at this point in time. Given these issues slowing growth, then definitely we need to, this corruption scandal is clouding the outlook. The fundamentals are there. We have a resilient economy. Inflation is recovering. So hopefully things would pan out. And again, recently the president said that we will continue with infrastructure spending. We will make sure that everything will be accounted for. But we really need to do those reforms that arises from the present floodgate scandal, and we need to do the TAG. So that's transparency, accountability, and governance.
Yeah, absolutely. Thank you so much for your time this morning. Jonas Rovella, Senior Advisor at Reyes Takandong.
Thank you for having me.
Now, as uncertainty rises, property buyers are playing it safe, putting a premium on safety and stability in their investment choices. From condo sales to office demand, new data points to a reshaping of Metro Manila's real estate landscape. Paolo Barcelon reports.
Both residential and office consumers are eyeing peace of mind from disasters as property trends lean towards resilience and safety. In its Q3 briefing, Lichu property consultants say master planned properties are the way forward for those looking for new condos or companies selecting where to establish their business.
In particular, what we noticed are influx of occupiers, especially for the provinces. They're more keen to look for master planned townships. There are available buildings, standalone type, across several provinces. You have Davao, Cebu, and Iloilo. These master plan communities are typically, within walking distance. And it's a similar performance with Metro Manila. You have the likes of townships in Quezon City. You have Vertis, Centris, Araneta, most especially. Araneta has been getting a lot of demand.
Amid the flood control scandal, Lichu analysts believe the impact of embezzled money on the sale of luxury properties is still speculative at this point. But Q3 residential market sales are up compared to the same period last year. Condominium sales are up 12% with over 7,000 units sold. High-end and luxury units are among those with the biggest growth year on year, while other income sectors are also getting good pickups. Lichu also says that developer reputation is a key factor in selecting locations for business expansion. Close to 80,000 units, meanwhile, are still unsold across Metro Manila, with growth in the condo sector positive across the BGC and Taguig areas, while Makati, Alabang, Bay Area, Ortigas, and Mandaluyong rent levels are down. Lichu adds rental rates decline across most districts due to the exit of POGOs. Despite this, office demand is at over 960,000 square meters, reflecting resilience despite global headwinds in the property sector. Paolo Barcelon, Bilyonaryo News Channel.
And in the United States, the political gridlock continues in Washington as Republicans and Democrats fail to end the government shutdown on Monday. A Republican bill gathered 52 affirmative votes and 42 nays, while the Democrat-led bill got 45 yes votes and 50 against. 3/5 of the Senate are needed to move either measure forward. U.S. President Donald Trump said he is willing to work with Democrats on health care policy, a contentious issue at the center of efforts to reopen the government. But Trump insisted that the shutdown must end first. The stalemate is straining federal services and adding pressure on markets, with investors watching closely how long America's political impasse will last. And that's it for Business 360. I'm Maiki Oreta. Thank you for joining us, and keep it here on BNC, the Bilyonaryo News Channel.